Thanks for tuning in to this broadcast of The Resilient Advisor. My name is Jay Coulter, and joining me today is my regular guest and friend, Chris Versace of Tematica Research. Chris, thanks for coming back on.
Oh, Jay, happy. It's, if we don't kick the week off together, it's something just seems wrong.
We've got a lot to talk about this week as it relates to earnings. I'm throwing up a chart from the good folks over at Earnings Whisperers. Please follow them on Twitter, ewhispers.com. Boy, that is a good looking chart of all the earnings we have before and after the bell.
Well, no. It's not even close to what we have. I mean, Jay, there's something like more than 1,350 reports coming at us this week, about 143 S&P 500. And when we're done by the end of the week, 4 p.m. Friday, when you're like, man, I could use some liquid refreshment, we will have had almost 80% of the S&P 500 report over the last 3-4 week period. So it is a big week, and we've also, as we'll get to, we've got some interesting economic data coming our way.
Why don't we start with the economic data? What do you?
Why don't we start with Jay? Why don't we start with how was your weekend?
Sometimes I'm all business. Sometimes I'm all business, and you bring me back in.
I'm take your pick. I'm like a gal on a date or a Xerox machine. Before we get going, you got to warm me up.
Here in the great state of Georgia, they've opened things up, which means I could have gone out and gotten a tattoo this week. I did get a haircut. They do allow that now. It's strange getting a haircut with a mask on. It's different.
I haven't had that pleasure. The whole reason I looked, kind of trim and coiffed is all because of Harry's taming gel. That's the only reason.
Harry's taming gel. Excellent. And what did you do this weekend?
I think the highlight that I would share with you and listeners is I got up, as I usually do on Sunday morning, started doing some reading, collecting some things for thematic reads, thematic signals. And then around 10 o'clock, I go, I'm a little beat. I'm just going to put my head down for a little bit. I woke up around 1:15.
Excellent. Hey, naps are good for your health. It's a fact. It's science.
That is true. I also think somewhere in the back of my brain, I was going, I am tired of this stuff. I'm checking out.
I get it. And you had a lot of research to do this week because there are a lot of earnings reports.
Yes, and we will talk about. Yeah, sure. Go right ahead.
Tell me what.
Wait. Sorry. Before we do that, Jay, I'm going to steal your thunder, and we're going to go straight into the '80s movie quote. Here we go, Jay.
Hit me.
Go ahead. Make my day.
Now, is that 80s or is that 70s?
That's 80s because that is later Dirty Harry, Clint Eastwood, Sudden Impact, not the first three that were all done in the 70s.
Excellent. A wealth of knowledge around movie quotes and stock investing.
All right, let's do it.
Hit me. What are you looking at this week from an economic data release standpoint? And Chris, in particular, what should advisors be looking for?
Yeah, well, I'll speak out of both sides of my mouth. So we've got a couple key data points. Probably the biggest U.S. facing is going to be the ISM Services Index for April. Last week we got the manufacturing, now the services. We know that we're increasingly pushing towards a service economy, and I'll put an asterisk on that so we can come back to that. So that'll be one to watch to see what's happening. Candidly, just given what we've seen in terms of consumer spending and commentary in and around that from companies that have already reported, I don't think we should be looking for anything to knock our socks off in a positive way. For me and the rest of us here at Tematica, probably one of the two key lines that we'll be looking at. One will be the order flow to get a sense of what May is going to look like, but then the other one is going to be employment. I say that for a couple of reasons. One, as you and I have discussed, and I'm sure you've touched on with other guests, over the last several weeks, more than 30 fresh jobless claims have been reported. That's a big number. We're going to see the windup of that in Friday's April employment report, which, Jay, ugly with a capital U is what it's going to be.
Right.
I believe JP Morgan is out saying that we could see a net loss of up to 20 million jobs. So it's going to be bad. But here's the thing, Jay. I almost think that investors are going to see it. Yes, they'll go, okay, now I can move on because I have that data. We know the market is forward facing. We know states like Georgia and others are starting to reopen in stages. We're seeing other economies around the world do it. I know here in the great state of Virginia today, the governor is going to talk about the plan to reopen the state. So I think we're starting to look forward a little bit. I think we're going to be caught candidly in a little bit of a push-pull between the data that we're going to get for April and May. Going to be bad, Jay. Going to be bad. That was almost kind of like Trump-like, wasn't it? Going to be bad, Jay. Bad.
Yeah.
Real bad, Jay. Bad.
Yeah.
Chad. Not going to be good. Bad.
But now tell us how great you are.
No, I can't do that. I just
great job you're doing on this podcast.
Jay, we are doing such an excellent job. No one's ever done a job like this in the history of podcasting, Jay. Anyway, so back to what we're talking about. So it's going to be we're in for a couple of weeks of really ugly data, and I think that at times the market will move forward based on what it's hearing last, and as we get some of that data, we might get a sobering look. But as we kick off this week and move deeper into May, Jay, there is something that's happening, which is a lot more saber rattling out of Washington about the coronavirus, about what was really behind it. Did it emanate from a Wuhan lab? Was it man-made? And there's also some other saber rattling about trying to remove manufacturing and supply chains through China, not just back to the U.S., which of course we are in a campaign year. Let's not forget that, but also to other friendly countries, U.S.-friendly countries. So this is the overhang that we saw on the market that began Friday, carried through the weekend, and it is going to be with us in part because there is renewed talk about fresh trade tariffs on China, and this is going to become the new focal point. I'm not happy to say this, but it's going to take over headlines in the near term, even as the market and consumers, citizens around the globe start to get mentally past the virus. So,
yeah, and you can see it in the news coming out of all countries, right? The blame game has started.
Absolutely.
The Chinese Communist Party is catching the brunt of it, and I'm not one to say whether that's right or wrong. I tend to think it's right. But because it's an election year, I can feel it heating up already. And as that blame game goes and goes.
Oh, it is a wheel. And make no mistake that, because of the pandemic, we are on a compressed cycle. It is going to spin even faster in the short term. And to your point about it's not just us, I believe Australia has come out with some comments regarding China and the virus, as have certain countries in the Eurozone.
Mm-hmm. So 30 million unemployed heading into May. Mm-hmm. So market being forward.
Doesn't that sound like a huge push for consumer spending to you?
So let's circle back to it. So how do you reconcile that with our economy being 70% or whatever the number is driven by service? And what is the potential uplift in the fall should this virus, trying to be optimistic, be shut down now? We don't see a reoccurrence. Then the numbers will just keep getting better and better.
Right. So a couple things in there. Directly, indirectly, the consumer's 2/3 plus of the domestic economy. So as we're sequestered in April, we know the April number is going to be bad. We know there's going to be a phased reopening in May. As a result, the numbers, just like we're hearing from restaurants when they compare April to March, they're still down, not as bad as they were in March. So hopefully our May economic numbers won't be as down as they were in April, but for the most part, they're still going to be down. To your point, if people are not spending, whether it's because they can't go anywhere or because they're concerned about their economic situation, given the number of jobless claims, the reality is the personal savings rate has moved higher. Now, that's a positive. May not be a positive move in that data for the right reasons, but it's still a positive. The question, I think, Jay, is if we can get through these phased openings and we don't see a rebound in the number of cases, maybe we breathe a sigh of relief for a period of time, and that pent-up spending that has happened is unleashed. That would be a positive. Remember, though, that we are more than likely going to see the coronavirus rear its head come the fall. So we'll have to see, and hopefully we'll have to see, what's that impact, but hopefully we've got enough time to become prepared to deal with it, unlike this time. Remember, this time was all about flattening the curve, so we did not inundate hospitals that could not cope, whether it's because of ventilators, beds, what have you. Hopefully we're now a little more prepared, and that won't be the case.
Chris, there were two terms that were commonly used during the great financial crisis that just got under my skin. The first was green shoots. We need a new term for this recovery other than green shoots. And the second was the administration saying jobs created or saved. It's a made up number. You can't clarify whether you've saved a job. Now, through that lens, I would have to
Oh my
think
God.
there's going to be, it's a political season. There's going to be some kind of terminology around that. So how is whoever's in power going to talk about jobs that have been saved and measured?
Yeah, I mean, look, politicians are no stranger to, let's just call it fuzzy math, and I think you're absolutely correct. I remember more than a few times pointing out the ridiculousness of jobs created or saved, because there's no way to measure how you saved a job. It's just impossible. It's ridiculous. As far as green shoots go, yeah, I mean, look, that's a term. It was around during that time. It's been around for much longer than that. I'm not really sure what you want to use, Jay. Spring flowers are here. I mean, something like that. I just,
maybe just something positive. I don't know.
Well, green shoots is positive, right? I mean, look, two weeks ago, I talked about moving some grasses around in my yard, and if you know the grasses the way they are, they tend to in the wintertime go dormant, so they're almost like very thin little bamboo shoots that pop up. But now I have little green stuff coming up. So green shoots, Jay.
Gotta have something else. You and I could at least come up with something else for this show. As we
I think we both know who can coin that phrase better than either one of us.
We do.
In fact, that could be a top fact. That's a challenge for next Monday.
That is a challenge. Let's talk stocks.
Do it.
All right. So in your NASDAQ Markets Daily Note, you highlighted some stocks to keep eyes on this week. The first one, Skyworks. What are your thoughts?
Yeah, so Skyworks is an RF semiconductor company. I've known them for a long time. They supply all the major smartphone companies. And remember, we know that smartphone volumes fell something like 21% in the March quarter. We heard that from Qualcomm. Apple said they expect iPhone sales to deteriorate in the current quarter as well. But the big question, Jay, is what is the ramp for the back half of the year? It tends to be seasonally strong. Most new models tend to get introduced in the back half of the year. And while Apple doesn't comment on this, there's speculation that they're going to introduce at least four 5G centric iPhones. We know we'll get more 5G products coming out there. Folks from Qualcomm to Nokia all said that 5G remains on track. So what we want to take away from Skyworks is not so much what does it see in the March quarter, but what's the build looking like for the back half of the year? That's the key part. And here's the thing with Skyworks and some other RF semiconductor companies like Qorvo, QRVO. When we have 5G come out, it means that there's incremental RF semiconductor dollar content that will be added to these devices. That benefits their business. The only way to grow faster than the overall market is to drive greater dollar content per device. And that's what 5G will do for both of those companies.
Excellent. Next on your list was Trex. What is Trex? I'm not familiar with the company.
Trex, it's an interesting one. They're actually part of our cleaner living index, and they make it in there because they are one of, if not the largest recyclers of plastic bags, and they make it, Jay, into environmentally friendly decking. So if you think about, in the days of yore when you would have a wooden deck, now you can replace both horizontal and vertical surfaces with Trex, and very low maintenance. It is a little bit of a premium product, but again, lifetime cost is far more favorable, particularly if you're like me and you don't necessarily want to have to sand and stain every year. But that's me. They are Winchester based, so Winchester, Virginia based. So they're about an hour away from me. So why do I want to pay attention to these guys? We know that we are normally in what's called the spring building season. What are they seeing in terms of demand? What are they seeing in terms of outlook? Again, consumer spending friendly because it's repair remodel for the most part. Want to pay attention to what they have to say.
Right. It could be a good lens as to whether there is the potential for another remodeling boom as a result of this. People spend a lot of time in their houses. They might want to make some
Well,
changes.
I think that's right. And remember, with the Fed's action, we have seen mortgage rates come down, and it's always a push pull between people who are refinancing to pull money out. One of my neighbors was just complaining that he only got a 30-year jumbo at 3.25, which is actually kind of funny when you think about it. I remember my first house was 8%, so I'm always happy with anything. Half that is great. Even more than half that.
Yep, that's right.
So.
All right. Next, let's talk about a little AMC Networks.
AMC Networks and AMC Entertainment are two kind of interesting companies. You need to remember that one is the actual network with the content, Hello Walking Dead. The other one is AMC Entertainment. So on the AMC Entertainment front, that's the one behind the movie theaters, which we know are closed. And I think at some point there might be some phased opening for them. But let's find out what AMC Networks is seeing in terms of content that we'll be bringing on air. What is the pricing associated with that content? Remember, Jay, you and I have talked quite a bit that between Apple, Amazon, Disney Plus, and Netflix and others, there is a content war that's going on. And I wouldn't be surprised if we see it bidding up in terms of content prices. We want to listen to that and understand what does that mean for AMC's networks. Also, too, how many more seasons of The Walking Dead do we have?
Don't know. Do you know?
I do not. I have to admit that I jumped on board early on, and then there was one episode. It took like 4 or 5 episodes to tell one tale about moving the zombies around a town. And I'm okay with extended storylines and dragging something out over a period of time. 4 episodes?
So
Don't think so.
Chris, my wife and I were late adopters, but binge watched it after like the 2nd or 3rd season. Thought it was great.
Mm-hmm. Yeah.
The storylines, they just got repetitive. I felt like I was watching the same show. And so we stopped a season or 2 ago, but loved it. I think that the first episode of the first season is the best start to a series.
I totally agree, because you wake up with Lincoln Rhyme, not Lincoln Rhyme. What is his last name? Lincoln. I forget his name. Anyway, the main protagonist, you wake up with him as he does to a whole new world, and you don't even see it coming. It was masterful. I agree.
It was excellent. What's not masterful or good is this chart. That is an ugly, ugly chart of AMC Networks. All right.
Oh, again, and again, we're not saying these are companies that you want to be buying. These are companies that you want to be paying attention to what they're saying, so you can put your own investment mosaic together, help clients, help yourself figure out where and what we should be thinking about and doing.
That's right. As always, there are no recommendations on the Resilient Advisor show, only thoughts and analysis. What are your thoughts on Cinemark this week?
Well, this, I'm glad that you bookended these charts together, because if you take my comments about AMC Entertainment, Cinemark is a movie theater chain. So again, how bad is the pain for this business? Not only, remember, are we not getting ticket sales, Jay, but those high margin snacks aren't being bought either. So, what's the cost of carrying that business? When do they see themselves reopening? These are the things we want to hear. Also, too, how are they planning on battling the increasing shift towards digital streaming? I was reading somewhere, I can't remember if it was Comcast or another one, that they're talking about VOD premium, working with the creators of movies and the like to actually bring streaming even faster to the home while people are not going to the movie theater. And from my own personal perspective, Jay, that is a slippery slope. And once you're on its way, it does not go back. As to paraphrase I'll make this saying PG, because that's the kind of show we are. Poop does not roll uphill.
No, it doesn't. So I have a hard time seeing a situation where I would take my kids to a movie theater in the next 2, 3, 4 months. And it would probably be probably be longer than that. It's just not worth the risk. I could see us going to a restaurant before we would ever go to a movie theater.
Yes, because you're at your own table. There is some degree of social distancing that's putting in place. Even in Vegas, the gaming commission announced that when they reopen, it's going to be 4 poker players at a table, not 9. Slots are going to be spread apart. There are things you can do. It'd be very interesting to see at a movie theater. How do you stagger people? I think we joked a couple of weeks back about airlines. What are they all going to rip out the middle seat? And even that's still not 6 feet. What do you do in a movie theater?
Yep. That's right. That's right. All right. Next, let's take a look at Papa John's International Holy Chart.
Yeah. Now that is a wonderful rebound. And if you think about it, Domino's Pizza really laid the groundwork for this chart, and Papa John's is essentially the same business model. I expect to see their comp sales be positive. I would be shocked if they were not positive for March, and again, give some positive commentary about April. But so this is one, again, I don't think I've ever seen anybody eat in a Papa John's. I don't think you can do it. So it's all delivery. So it should be a great beneficiary of what's going on here.
Yeah, up 36% last month alone. Wow.
Yeah.
Disney. What are you looking for in the Disney earnings this week?
Well, I think there's going to be 2 or 3 things that people are trying to, wrap their head around. One, let's just get it out of the way. During the quarter, they turned on Disney Plus in European markets, so we should see a wonderful sequential uptick in the number of subscribers for Disney Plus. Second thing, let's talk about some things we were just touching on. Hey, Disney, you make movies. What are your plans when it comes to the box office as opposed to streaming on Disney Plus? Because you know what? If they start telling me that they're going to release certain movies only on Disney Plus, that you could start to see people going, oh man, I'm going to have to subscribe. And guess what? If you take a look at the VOD premium prices that are out there today, I think you could watch Blumhouse's Invisible Man, for example, on either Amazon or Apple. To rent, it's $20. So if Disney turns around and says, hey, new Disney movies, only on Disney Plus, $6.99 a month, ding, 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 we have a winner.
Hey, Chris,
it's that.
With Mandalorian in the Star Wars franchise, they've already done it, and that's the only reason we signed up for Disney Plus in our house.
Well, you just confirmed something that we at Tematica have long felt is true. People will vote with their feet, vote with their wallets for content that they want to watch. It's as simple as that. And I think, candidly, I think that's why network TV is suffering, because there's just simply not a lot to watch.
Yeah, what they do put out is garbage too. So anything
right?
Else?
Okay. So sorry. So 2 other things on Disney. Obviously the parks are closed. What are the plans to reopen them? The timing. There's been some chatter out there that they may not reopen until 2021. Now, I can't tell you when I think they'll open, because it's just, there's no way to social distance correctly at Disney, to go on rides and be social distance. So this clearly is going to be something that they are struggling with. But if any CEO can sit down and talk people through it, it is going to be Bob Iger. I can tell you that. But again, what's the impact? What's the outlook for the back half of the year? Do I think they'll give any formal guidance? No. I think they'll take a playbook out of Apple from last week, and they'll talk directionally about some of their businesses. But this is going to be the one of, if not the report to watch this week.
And do you recall what day that's coming out? Off the top of your head?
I think Wednesday. Okay.
Excellent. Mm-hmm. All right. Tell us about what is Fortinet?
Cybersecurity. So the reason I wanted to highlight this is, before we talk about why we want to talk about it, I have to disclaim that Fortinet is indeed a member of the Foxberry Tematica Research Cybersecurity and Data Privacy Index. So that's the first thing. But we have seen no shortage of reports, quite the opposite, a deluge of reports about the pandemic and the holes that it is creating, whether it's phishing scams, other malicious attacks. So Fortinet is going to come out, and I suspect that they will talk quite a bit about the rise in attacks that they are seeing, very confirming. I wouldn't be surprised if I'm right and the comments are indeed bullish for cybersecurity spending, that we see an uptick in most cybersecurity stocks. So that's what I want to be listening to. And again, a lot of data is going to be had in this, not only about the types of attacks, but about the frequency of attacks. And if they echo anything like what we're hearing, Jay, it should be a barn burner of a commentary.
Yeah, I mean, look at the price action over the past 12 months in the stock. It's very interesting. Up 20%.
Well, I mean, so Jake, just conceptually think about this, right? We've heard Apple, we've heard Microsoft, and other companies talking about, whoa, the real shift to working at home during the pandemic. Okay. Now, are all the safeguards in place if you were working inside your regular firm? Probably not. Some, yes, and that's positive for companies like Mobileye and others, but security is an issue. And there's going to be a lot of holes. And I personally think that in 3 to 6 months, 7 months time frame, we're going to hear about a volume of attacks that were happening in the back half of March, April, and May.
Mm-hmm. All right. Any other thoughts on that company?
No, sir.
Hyatt. Hyatt. Who is staying in hotels? What are we going to learn?
Again, yes. Now, we're going to want to break this down between what they're looking to see in the coming months between the U.S. and Europe as they reopen. But more importantly, Jay, what are they seeing in China? Because we've heard some conflicting reports. There are reports that saying that not U.S., like GM and through its partnerships, they're seeing positive auto sales in April. Other reports are talking about a rebound in watch sales and things like that, where the higher end or pent up consumer spending are really starting to roll through. But we're also seeing others kind of talk about, some hesitancy on the part of Chinese consumers. So we're going to want to kind of pull that a little bit. For Hyatt, are they seeing any rebound? Walk us through what February, March, April look like and what's the expectation for the balance of the second quarter. And then we can use that to think about other hotel chains, whether it's Hilton or Marriott.
Yeah, I mean, I remember having Lenore on the podcast a couple of months ago, and she said the occupancy rate in Italy at the time was like 3 or 4%.
Oh, it's ridiculous.
Did we see those numbers here domestically? Do you know?
I have not, but Hyatt, I think, is going to be one of the first major chains to report. So it'll be worth, dialing into. And again, doing some compare contrast analysis.
Excellent. Budweiser. What are you looking for?
Well, I don't know about you, Jay, although I can speculate that much like everybody else, your imbibing is probably up over the last several weeks.
Just a little bit.
Just a little bit. Okay. So a couple things for Anheuser-Busch. There's already been a shift away from beer, and people have been tackling wine, spirits, but there's also been a shift towards something that is a little, I can't say this with a total straight face, but a little healthier for you, which is these spiked seltzers that are out there, whether it's from Truly or some of the others. Now, Bud, they are one of the largest, if not the largest beer manufacturers out there. What are they seeing in terms of volume? Are they getting hit? How are they pivoting their portfolio to match changing consumer preferences, particularly in the spiked seltzer category? That's really what I want to know. The other thing too is they've talked in the past about dabbling with some cannabis infused product. Is that anything? Is that matriculating? What are the tests bearing out? That sort of thing.
So you're looking at their product lineup, any changes they'd be making to it going
Correct.
forward.
Absolutely correct. Thank you. Yes.
Are you expecting volume sales to be up though?
I think that they could be up for certain categories. I'm always, we can talk frank, right, Jay? So here it is, okay? If you've got to come out with Bud Lemon, Bud Lime, and, Bud Rose Infused or whatever nonsense is out there, you're just not giving the people what they want. You know what I mean? You're like, it's almost as bad as Oreos, and I love Oreos. They are one of my biggest downfalls ever. Mm-hmm. So when they first had Oreos and double stuffed Oreos, I was right on board. Okay. And then when they had mint Oreos, I was okay with that. They had the vanilla Oreos, not the chocolate cookie, the yellowy quote vanilla cookie. I was on board with that too. But when they started having birthday cake, Swedish fish, and all this other stuff, I was like, you guys are losing it. Where's the focus? Where's the direction? And I think the same is true, candidly, with some of Bud's portfolio.
Yeah, really well put. I couldn't agree more. All right, final stock of the day, Universal Display, your partner's stock of the year. No, it wasn't
Yes,
stock of the
yes.
year. It was, I challenged her to a situation.
I think it was. If I remember, Jay,
I
it was.
challenged her to a situation where she could only put all of her money in one stock for the rest of her life, and this is what she picked.
That is correct. Stock of a lifetime is what we call it. We have talked about this stock for a long, long time. Back in the day, it was their key product is organic light emitting diodes. It replaces the LCD technology that is most notably in the smartphone today. That's the real volume application for it. As we look and go throughout the year, Apple has made noise over the last, 12, 18 months, something like that, about accelerating the shift towards organic light emitting diode displays. That's a very big positive for this company. Do they make the displays? They do not. They sell the chemicals, and they have intellectual property licensing rights in businesses for that. So it's a very high margin business, IP licensing. And it's kind of like a Qualcomm business model, right? So Qualcomm would be, if you want to license my IP, you got to buy my chips. You want to buy my chips, you got to license my IP. Something similar here as well. You want my IP, you got to buy my chemicals. You want my chemicals, you got to buy my IP. So we are seeing a multi-year ramp in the shift towards this type of display technology. And I think that bodes extremely well for these guys. In the near term, we know smartphone volumes are going to fall. The question becomes to me, if they give guidance, what will it be? I think with volumes down in the near term, the best they can do is point to an uptick in the back half of the year. I know we don't make recommendations here. So if I was talking with the person who thinks this is the buy of a lifetime, what I would say is this. Wow, if you liked where it's going long term and the stock gets hit here, but the thesis underlying the shift is intact, gee, that could be an opportunity.
Excellent. So last week I asked you what stock you would allocate your whole portfolio to if you could only pick one stock.
Do you remember what I said?
I can't remember what you said.
Oh, thanks, Jay.
Yeah, right. But I want to change it up because I know if I gave you this in advance, you'd put too much thought into it. You'd overthink it. So tell me if you could only pick one theme to have your money invested in for the rest of your life.
Oh my God.
Right?
God, I mean, the problem is they all have like multi-year tailwinds. I was actually reading something, a CNBC article over the weekend. This gentleman over at Jason Bloom, I think, put it up very well. He's over at Invesco. And he, I think, thinks very similar to the way that we do at Tematica, in that we don't look at trends, short-term things. We look for demonstrative multi-year happening, structural changes. You've heard me spiel on this before. He's looking for things that are around 10 years. I think 5, 10 years, that's the sweet spot that you want to be in. But I can tell you this, there's no slowdown in the shift towards our digital lifestyle. If anything, with 5G, we're going to see more aspects of that come on with Wi-Fi 6 and the like. So you might think I'm going to pick that, but I'm not. The issue here is this, okay? The deeper and deeper we go into that lifestyle, the underbelly of it is more opportunities for attacks and things like that. So I think cybersecurity is going to be a growth industry like one we haven't seen before. And there are a variety of reasons to talk about that. There's also the aspect of data privacy. So the theme I would go with is the cybersecurity and data privacy theme. And again, just in terms of disclosure, we have a Foxberry Tematica Research Cybersecurity Data Privacy Index, and that index powers the RISE ETF of cybersecurity, data privacy, and I believe it's a UCITS available in Europe now. Just full disclosure.
Excellent. Chris, for listeners and viewers, if they want to find out more information about those indexes and your work, where should they go?
The best place is always tematicaresearch.com, Jay. We're posting fresh content up there. That's the best place. But, they can also check us out on Twitter, at Chris J. Versace. Or if they want to march on over to Rise ETF, riseetf.com, and all that's there.
Excellent. Chris, man, you were very generous. 35 minutes today. I really do appreciate it. That was great insight into a big earnings week. I look forward to debriefing it with you in a couple weeks.
Let's make it so.